Well, good afternoon, and thank you. I'm just wondering how I can get my gold and copper into the metaverse at the moment. But anyway, I wanted to tell you about U.S. gold and what we're up to. I'll be making some forward-looking statements, so cautionary notes with respect to that. So what's U.S. gold all about? Well, our primary activity at the moment is advancing a gold project in southeast Wyoming, but we have a great portfolio of assets in Nevada, exploration assets in Nevada, and also in Idaho. So what are we all about? At the moment, we're looking at near-term production. And just to go to my background, I'm 40 years in the mining business, 16 years with Barrick and Rio Tinto and Anglo American, and gosh, it goes on. But I've been operating and developing mines for a number of years. I was happily semi-retired, and I got introduced to the U.S. gold, and in particular the asset that is in southeast Wyoming. So we are really advancing that very rapidly. And my perception was that we could get this into production very quickly. And, you know, why is that important? Well, I think you've got a lot of stories about opportunities, but this thing's going to be shovel ready in a year or so. It's going to be U.S. production of gold and copper. Gold at a time when we're all wondering what inflation's going to do to the value of our money. Copper at a time when we're looking at electrification. And we've got a good ESG story as well. So with that, I'll get into the CK Gold project in a moment. As we look at exploration, we've got some fantastic assets on the major gold trends within Nevada, the Carlin Trend and the Cortez Battle Mountain Trend. Now we don't get much recognition for that at the moment, but they are in the right territory, and we'll talk about that a little bit. Also some opportunities in Idaho. So look, we're not in the traditional space for resource companies, which is the Canadian markets. We're actually listed on the NASDAQ, very tightly held share structure, 8.1 million shares of common outstanding. So we've got some really solid shareholders, and we trade up and down on the retail market on the NASDAQ, and you can see what's happened lately with respect to the share price. Like everybody else, we'll tell you that we're undervalued, but I really believe that we are, and I'll tell you why. So, you know, with that, I think the only other thing to mention is that we've got over $9 million in treasury at the moment. We've done all the heavy lifting with respect to our development project, and we'll be bringing that to book shortly. So we're very well positioned. We will be we'll be getting in after permitting toward development, and that will, I'll give you the time frame on that. So, you know, the valuation in terms of our peers. Well, you know, at the moment, I think the whole sector has been put to the side from the investment perception. But you know, we will be bringing U.S. Gold Corp. I think we're you know, at a PNAV of 0.13 times, and so it's a real opportunity to get involved at this particular point in time. ESG is really important to me after my career in mining. You know, I'm not about to do anything which is going to be deleterious to the environment. So we're very focused on our environmental, social, governmental aspects. We just concluded an audit, and we'll be putting something on our website with respect to that shortly. But the main activity at the moment is bringing the CK Gold project into operation. And let me just tell you where it is. We're in southeast Wyoming. So if we were in Jackson Hole, Wyoming, we wouldn't be talking here today. We're in southeast Wyoming, and southeast Wyoming is a part of the sort of resource state revenue. You know, with lots of coal mining, lots of trona mining. A lot of the state revenue comes from the resource business. Coal is in a bit of a decline, no more power stations. So Wyoming is looking to diversify its resource revenues, and copper gold is certainly on their radar, and we're getting a very positive response from the Wyoming authorities. So we're located about 20 miles to the west of Cheyenne, Wyoming, and you know, from an infrastructure perspective, you know, I've built projects down in the Andes where we've had to build man camps and roads up into the mountains and so on. You know, we're 20 miles from Cheyenne and 30 miles from Laramie, Wyoming, where our workforce can go home at night. We'll bus the people into the project, and we're, you know, blessed with a lot of infrastructure. The I-80, I-25, the I-80 corridor is right here, Union Pacific Rail Line. In fact, the rail line sits right next to Martin Marietta's quarry, 3 miles to our south. There's mining in the area. People are accustomed to mining in this part of the world. So we get it, you know, the other thing I'll mention on this slide is that we're on a Wyoming state sections. So this is Wyoming's land, and we've got the mineral lease for that land. And the custodians of the state lands have an obligation to seek the highest and best use for their land in their portfolio. Currently, they're getting about $1,300 a year from the local rancher who lives around here. This is all private land around the property, and that is, you know, that's been great for the rancher. His name's Walt Ferguson, 5th generation rancher there. But we're looking to extract an ore body which will generate $30 to $50 million of royalty revenue to the state. We've just had an independent economic study done, and besides our direct investment and the indirect investment and the induced investment, the University of Wyoming Business Center suggests that we're going to be paying $75 million worth of in taxes, federal and state taxes. So there's a lot of positive attitude towards the development of the project, and being on state land, that revenue, those royalties are earmarked for K through 12 education. There's a deficit in the education, so the governor said, hell, we'll bring out some yellow school buses and support your project because we need the money. The fact that we've got all this infrastructure around us means that we are 6 hours from Salt Lake City, an hour and a half from Denver, 4 hours from Gillette. All the OEMs are represented there, so we don't have to build huge warehouses, supply chain issues. It's all there, ready to go. So I joined the company in September of 2020, and with the notion that we can get this into production quickly. There was a preliminary economic assessment, and since then we've built a pre-feasibility study which was published and is available on our website in December of last year. And these are the metrics surrounding the pre-feasibility study. That on what we know, what we have identified as proven and probable reserves, which are just over 1 million ounces of gold, 240 million pounds of copper. That goes to an equivalent gold resource of 1.44 million ounces. We put that into a 10-year mine plan operating at 20,000 tons per day. That spits out 108,500 equivalent gold ounces per year. It's front-end loaded, so the first 3 years, 135,000 equivalent gold ounces of production, and and that's at a all-in sustaining cost of $800 per ounce. So we did those numbers at $1,625 gold and $325 per ounce and $325 per pound copper. It pays back in 2.2 years at that level. We all know where gold is at the moment. It's off a little bit at the moment, but copper's been approaching $5. Gold has been over $2,000. We believe that it's going to go up. This thing pays back really quickly. As you look at the cost to put the project into operation, $220 million. We're looking at some really good financial or financing terms from the OEM providers of our concentrator, and there's also some state development funds, 8-year note, very low interest rates. So we think that this is very doable for ourselves, or who knows, a partner at a later date. So I've discussed the reserves and the resources. This isn't the end of the story, and I'll show you that in a minute. We've got additional reserves and resources at depth and to our south, and we need to explore the area. But for right now, we're working on the value proposition that I've just identified. And some more highlights. So what is a project all about? How are you going to get a project permitted in the United States anymore? Well, look, we're on state section land. We're surrounded by private land, and the only potential federal government agency that was going to be involved in our business would be the Army Corps of Engineers. We had a determination in February last year that we're non-jurisdictional. So as a consequence, we are under the jurisdiction of the Wyoming Department of Environmental Quality and State Lands. Our interactions with them have been very positive, and rightly so, because we've got a very simple, clean, safe project. Essentially what happens is the pit's over here. We truck over the material that we're going to process at 20,000 tons per day into a primary crusher, stockpile, goes into a bag, a ball sag mill, a sag mill ball combination. We then grind the rock up, and all these tanks here are flotation tanks. So we essentially use tanks with froth flotation to lift out and pull out the portion of the rock that we've crushed and grind, which has a gold and copper in it. We then dry that and bag it and ship it off site to a smelter. The spent material that now is depleted of the copper and gold, that gets put into pressure filters so that we can reclaim the water and reuse it, and then we stack that into a tailings pile, cover it, re-topsoil, revegetate. And so really, as you look at the project from the perspective of, somebody having a mine in your area, we don't have a tailings dam, which is a concern to some folks. We don't have smelters or a furnace or any kind of stack emissions on site, and we reclaim the water and essentially have not using any real toxic chemicals. So from that perspective, we've had a lot of social outreach to talk to our local folks, and they certainly understand that. And as I mentioned, we've got this type of activity just 3 miles to our south, so they understand the consequences. So this is essentially the kind of final work that we're doing beyond the pre-feasibility study, and we've finished the physical work in the field. We're collecting the data now in order to be able to analyze that and put it into a feasibility study. So we're working towards a feasibility study which will be bankable towards the mid part of the year. We're also collecting the last data, and we now have over 18 months of baseline data so that we can submit a permit to the Department of Environmental Quality. So these different color holes, exploration holes, just pushing out a little bit some of the boundaries of the resource. We've also doing a lot of work on hydrology. You put a hole in the ground, are you going to dry up people's wells or the creeks? We're not going to do that. Are we, as we expose rock, is it going to have any nasty constituents leaching out of the rock? We've done the geochemical analysis. It's not going to do that. So we're in good shape there, and we've done a lot of work on the site as well. So as I mentioned, this is a deposit. It's got a very low strip ratio. That's important because as soon as you've built your concentrator, you want to go in, mine rock, put it into the concentrator, get revenue. That happens very quickly. There's no big pre-strip associated with this project. In fact, some of our best grade outcrops on surface. And, this little sample that I've got here is some of the material that the old miners were mining. There's an old mine shaft. It's part of an old mining district. This particular sample is just shy of 8% copper and just shy of 12 grams per ton gold. Unfortunately, this isn't the tenor of the entire deposit. It's fairly low grade in its entirety, but it has high grade within it. And, I think that'll be an upside as we get into the work. So, we have additional resources at depth. We want to put the value proposition around what we know about, and that's the pit where we would mine the rock. Surrounding the resource, we've actually got really, really good rock, and that is a potential source of aggregate for Cheyenne, for Laramie, for all the wind farms that are going on, for ballast, and for all the development that's going up and down the Front Range. We haven't incorporated that into our numbers, but Martin Marietta are selling rock at $18 a ton. We've probably got 30 million tons of really good rock. So there's, you can do the math. There's some additional revenue that we need to bring into the project. So, as I mentioned, we're going to be in a position to put our feasibility study out toward mid-year. We're going to have a permit application submitted in Q3, and the permit cycle, we think we should have a permit sometime in 2023. I'd be remiss not to mention our assets in Nevada and Idaho. The Barrick complex, Cortez Hills and so on, is just 10 miles away from our property. As I mentioned, we've got the Maggie Creek, which is right across the road from Gold Quarry, 28 million ounces pulled out of Gold Quarry over the year. We just found Popovich Formation, which is a formation which is the host rock for the big gold deposits up and down the Carlin Trend. I worked there for many years, drove past it, didn't know that was there. And also we have Keystone, 20 square miles of property there, which essentially is very prospective. So we'll be looking at that in due course. I'm just going to skip through these slides in the interest of time, but this is our Maggie Creek Popovich intersection is on the south end of our property. This is Newmont's Gold Quarry. We've got them very interested in what we have found. So with that, I'll just mention that Another company just next door, neighbors to us, have come up with some very interesting results. We've got historic mining on our property here. We're pursuing that. So good team, good board of directors. I'm leveraging off a lot of the folks that I know to get the best and brightest on the job, and we should be seeing some news about the advancement of the CK Gold project in the short term. So with that, I think we can take some questions if there are any. Yes, sir. I was sitting on the plane down here. I just came in this morning, and there was a fellow next to me, and he was going off to a cannabis farm just north of town here. And, we've been competing for capital, with other, with other assets and asset classes. So you look at Bitcoin, you look at cannabis, things like that. There's a lot of the investment interest is being focused, and diverted. We're also looking at a situation at the moment where cash is king, and I think as soon as we de-risk this, then we will get the recognition. Yes, sir. It's about 70%. Well, it depends on the prices, but about 70% gold, 30% copper.
U.S. Gold is in a kind of a unique little universe of production companies that are only listed on a U.S. stock exchange, and I find that interesting because it's kind of this weird sort of place where, because the Canadian banks, of course, are the ones who provide all who love to provide capital or to all the services, but they only like to do it for their Canadian companies. And then the U.S. listed banks don't really give a hoot about gold mining. So my question to you is, what is of course you're listed on the NASDAQ by design. What is the mentality there?
Well, actually, the mentality is that, the U.S. market is so huge. It only takes a little bit of interest and inspiration. And when we were, I think we're trading $5 odd. When gold peaked above $2,000, we were up to $1,775. So, gosh, it takes a little bit of enthusiasm, but people wanting to own gold and gold stocks. There's a huge market, and there's a huge market, so that's fine. But really, as we go into development, we are, thinking that we really perhaps need some of the Canadian banks and Canadian investors who are a little bit more familiar with the resource sector to come on board. So as a consequence, we're moving towards a Canadian dual listing, and I think at the moment we're not in the need of cash at the moment, so we can see ourselves through our big value creating propositions, which is getting the permit, getting the feasibility study out there. But as we start looking towards development, we think that we've got probably 3/4 of our capital cost at very favorable terms on debt, but we will be doing an equity component, and by that time, I think we need to be dual listed.
All right, well, thank you, George.
Well, thank you.